solo 401k? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. In this video, I'm going to explain to you the differences between a Roth and a 401k, and then talk to you about some of the differences and kind of where I land. What's a Roth? Well, you can have a Roth IRA, which is essentially an after-tax IRA, no tax deduction, but so long as you're over 59 and a half and the Roth's been open at least 5 years, all Roth IRA distributions are tax-free. In addition, Roth IRAs have no required minimum distributions. Now, in 2022, if you make more than $214,000 married filed jointly, you cannot do a Roth IRA. But you can still do what's called a backdoor Roth IRA. That lets you do an after-tax IRA contribution and then convert it to Roth tax-free. 401k plans are allowed to have Roth options, starting with 2002, after the IRA Act of 2001. So that means in 2022, you can make contributions of $20,500 or $27,000 if you're over 50 in pre-tax or Roth. Now it depends on the plan document. A lot of the free plans you can get at Bank of America or Schwab, they may not give you that Roth option. Whereas if you use a plan company like IRA Financial, our plan allows you to do pre-tax or Roth. Now the employer contributions or profit sharing, which is essentially a max of 20% if you're a single member LLC or sole proprietor, or 25% if you're a W-2 employee, must be done in pre-tax. You can convert it to Roth, but it must be done in pre-tax. So, what do I like? I'm a big Roth guy. I wrote a book about Roth. I have all my contributions in Roth. Why? Because tax deductions are important to me, right? Even if you're at the highest tax rate of 37%, the deduction adds value, right? It reduces your taxable income by the amount of that contribution. If you make $100,000 a year and you're able to contribute $30,000 to a 401k plan tax deductible, you now pay tax on 70. Every accountant will tell you that's a good play. And I agree, it's tough for me to resist that, but I'm a pretty young guy. My goal is, hey, where am I going to be 59 plus? When I'm 65 and that money has been growing tax-free, the ability to just pull it out without paying tax, I expect to be in a high tax bracket in my late 50s, 60s. I don't know where the tax rates will be, but I don't want to play a game of roulette. I want to lock in that tax-free growth now. Yes, I will not get that tax deduction today, but hopefully my investments are successful, and in the next 15, 20, or 30 years, I've been able to 5 times, 6 times my money, and then I can just pull out whatever I need tax-free. To me, that's worth it. I know a lot of smart colleagues of mine that disagree and rather take advantage of the deduction today because they don't know what will happen in the future. They make bad investments. Maybe the government changes the rules on Roth. I don't know. But I'm a big Roth guy. God we trust and Roth we prosper. That's the name of my book. So that's what I do. You have the choice. Now, if you have a solo plan and you don't have a choice because the plan requires you to do pre-tax, there are options out there that allow you to go Roth. The profit sharing must be pre-tax. Plus, there's something called a mega backdoor Roth 401k that lets you go dollar for dollar Roth 401k up to the max of $61,000 or $67,500 if you're over 50. Now, not all plans allow for it. Only specific do. Our plan does. So if you are a Roth lover, you have a solo 401k or you're self-employed, have a small business with no full-time employees, you are eligible for a solo 401k, you should strongly consider the mega backdoor Roth 401k. It's the best way to allow you to maximize your Roth contributions of up to $61,000 or $67,500 for 2022.